Welcome back to another episode of Bipolar Markets. Today, we're looking at the potentially really positive news that has come out of the Trump administration as well as the CCP agreeing to grant trade exemptions to phones, computer, and electric components. I'm sure this will lead to extreme positivity on Monday when the markets open, maybe a 5% gain on the entire S&P 500. In today's video, we'll quickly address why that trade deal with China just on computers and phones was done so quickly. It was really no surprise, and why it's always risky to short a market when we're in extreme negativity, and maybe it's a good idea to take any gains we make over the next few months and maybe just put that money aside or just be less risky in the market. The best way to support a small and upcoming YouTube channel is to hit the like button, comment your thoughts down below. I do respond to every single one of those, and subscribe if you like the videos. That's the only way a small channel can grow. Thanks for your time. Let's get back into the video. Okay, first up, addressing that phone and computer deal done in the market. That's really a drop in the bucket compared to the still remaining 10% of trade tariffs on pretty much the entire world, as well as the 145% tariff on the rest of Chinese products that we still have no deal for. But the reason why this is going to be big news is it's going to impact one of the largest companies in the entire world. Apple, hand in hand with Trump, announced a couple months ago $500 billion worth of investment to start building Apple products in America.
Apple announcing a hefty boost in spending in the United States. So here's what we know. CEO Tim Cook sat down for a meeting with President Donald Trump last week, and then he committed to bump in spending about $500 billion over the next 4 years. Mr. Trump reacted to that investment in a post on social media, writing, "The reason for that investment is, quote, faith in what we are doing, without which they wouldn't be investing."
Now, the way this was all phrased and posed in the media was Apple was really bowing down to Trump and really celebrating his win as president. Now, this is really important, and really one of the giant positives of Tim Cook as CEO at Apple is he's really good at playing the political game, really bowing down his head to whoever is in power, and maybe he could get some kickbacks, just like a China trade deal, exempting mainly his products imported into America. Moving on from Apple alone, we also have many countries, potentially 90, agreeing to meet the United States over the coming weeks and trying to announce trade deals before that 90-day pause on reciprocal tariffs comes off. So at the moment, basically there's a 10% flat tariff on all imported goods, excluding China and some things like steel. Those deals were done a month ago, but overall we have this peace period in the market where maybe every week we're going to have positive trade deals announced. They're not going to keep that a secret. As soon as there's some positivity to be announced, you bet it's coming out, because there's so much negative sentiment right now surrounding the Trump administration. They're going to grasp on any type of positive news that they really can. We do have this very special moment that exists right now with the S&P 500. If we draw a peak from the prices back in late February to the short-term maximums that we saw in March, we create this sort of negative downward trend. And usually what we see in investing is when we go above that trend, we are breaking so many negative and downward forces that it actually encourages more investors to buy into the market. You may even hear phrases like breaking above moving averages or breaking back Fibonacci sequences. We've got all this fancy language basically just saying, hey, look, everyone else is buying, I want to buy in too. And this is a great moment to show you what I think about the current trade war and the economic really pattern that we could see over the next 12 months. So I think there's going to be 3 phases to this, and there's more in the future, but phase 1 is always a emotional response to any crisis. Usually companies get sold off, people try to put their money in safe places and sort of see what happens. And then there's this period of what we would call phase 2, blissful ignorance, where all of a sudden we might have some positive news come out And overall, maybe people want to put their money back in. They don't want to miss out on making money over the next few months. You may have even heard colleagues, family, friends say, oh, I've got a few $1,000s laying around. I want to put that into the market and make some money while we can. I'm going to pose now 2 major reasons why we could go back to all-time high stock prices in only a matter of months. As soon as we have a flip in the market and a potential to make a bunch of money, you have some of the biggest forces in media pushing people to invest their money in different things. That could be stocks, gold, whatever. You always have the mainstream media trying to sell ads on their network. Even people on YouTube are trying to sell trading platforms. Everyone wants your money in the market and whatever's hot at the moment. Seeing the S&P 500 up 10% in 3 or 4 days, you bet your ass you're going to see people on the investing media saying, you got to put your money in now before it's too late. Also, those advertisers trying to sell cars and all these other things on your TV, they also want the economy to be strong. At the end of the day, nobody wants to sell fear for more than really a month or two. You also have hedge funds basically doing the same thing. Put your money in our fund, buy our product, and you'll become rich in a matter of months. Look how good this market is. And the whole time, they're charging you 1% on your money per year, making billions of dollars. And they don't really care how you do. If you lose half of your money, they still charge you that 1%. So reason number 1 was you've got this entire media structure pumping up stocks for the next few months as soon as we have a little bit of positivity. Now, reason 2 that we could have positivity is really just as a bounce back force against the extreme negative sentiment surrounding the current stock market. Looking at the AAII investor survey, just surveying amateur investors, what do you think in terms of the stock market for the next 6 months? We have seen a bearish sentiment of around 60% of investors going back all the way to late February. Now, usually at the worst times of a recession, 1981, 1990, 2002, 2008, the worst times of recession, you may hit a negativity number for investors of around 50 to 60% only for a few weeks. And we have had that for about 6-7 weeks now. What I'm seeing here is a bunch of cash ammunition waiting on the sidelines for a really sniff of positivity. As soon as we get, some decent up days, really only 3 or 4 strong days in a row, a flood of cash is waiting to be invested in the market. Putting up this timeline trend again, we could have positivity for 3, 4, 5, 6 months. Nobody really knows the timing of it. But I do believe we are headed for a phase 3, and that is a full-on recession and market crash. As it stood at the end of 2024, the entire world is connected by free trade agreements, international supply chains. A single product like a computer might have components from 30 countries, be assembled in 2 or 3, and every time it crosses a border, you're hoping with the free trade agreement, you're not charged 5 or 10% on the value of that component. And that's really how the world's existed, looking at this chart, really since 1960, 1970, as the total average tariff rate has slowly plummeted throughout history. About a peak of 50% on average of total goods. It dropped down, having a couple world wars. America came in and pushed this free trade type of relationship. We have now seen the average tariff rate fall to around 3%. As the current trade deals exist, that number's probably around 30%. In other words, we have roughly times 10 that tariff burden experienced mainly by small businesses and consumers. And you may be tempted to compare that to what's called the Smoot-Hawley tariffs in the 1930s to try and protect America, which led to the Great Depression. But don't forget how complicated the trade system really is today. Again, think of that computer example. We are interconnected by a factor of, who knows, 100 times more complicated. It's much worse trying to put together a computer versus selling some wheat to a different country. But not only that, the average tariff back in 1930 was around 20% of import prices. Today, like I said, we are roughly 50% worse than that. I'm going to show you two different clips now of how much that could be a catastrophe really for the entire world. Rather than hearing me rant again, I just want to show you here a clip from the BlackRock CEO who has connections to all of the S&P 500 CEOs. They're the investment company that owns 20% of your average large public company.
There's no question CapEx is falling right now until you have better understanding where should that CapEx go. But I do believe, as I said in my talk this morning, yes, I do believe the mega trends are still with us, whether it's AI, data centers, infrastructure, the whole reorientation of our economy. So I think the mega force trends are not going to change by what is happening now, but maybe the execution of some of these trends may be delayed, may be pushed out longer. But I still remain to be optimistic over the long run. Yes, we have to recalibrate. Yes, I do believe we're probably starting, if not, we're in a recession. Yes, I think the market is still underestimating how high inflation can get. If you factor in all the tariffs,
right,
you factor in all these other issues, it's going to be quite additive. I mean, I read in a report that if you just take the tariffs in the cost of home building, the average new home could be up as much as 26%. We already have a housing affordability problem.
None of this sounds any good to me.
So we have there really a lack of confidence in the direction of President Trump. So we have maybe capital expenditures, businesses investing in themselves down, who knows, 10, 20, 30%. No one really knows that number yet.
The US-China trade war has kicked off. Just look at these containers piling up on the docks. These are all waiting to be exported. This footage was taken on April 11th by a Douyin user in Zhejiang at a local port. It's not just Zhejiang. In recent days, major export hubs along China's coast, including Guangdong, Shanghai, and even Hong Kong, have seen freight operations come to a near standstill. Ports in these areas are now filled with containers waiting to be shipped. The 145% tariff imposed by the United States on Chinese goods has officially taken effect, triggering severe disruption across China's export supply chain. According to Chinese financial outlet Caixin, at Shanghai's Yangshan and Waigaoqiao ports, many shipments bound for the U.S. were rushed onto vessels in a race to depart before the tariffs were enforced. But after the U.S. announced a 125% tariff, Shanghai's once busy export activity came to a sudden stop within days. By April 10th, almost no cargo ships bound for the U.S. could be seen. Reports say many cargo ships and freight flights between China and the U.S. have been canceled. Containers that missed the shipping deadline are now stuck at dockside storage yards, and many exporters are filing customs return paperwork. It is estimated that about half the shipping capacity on U.S.-China routes will be canceled in the near future.
Looking at that picture of those shipping wharfs in China really coming to a standstill and putting together the idea that those shipping containers are full of small items that really small businesses of less than 10 people rely on selling those items for a profit margin of around 10-15%. That generates a whole bunch of economic activity inside America. And, it's like a chain reaction. Those small business owners hire people. They also take their earnings and spend it in their local economy, just living. All of that business activity is going to plummet to zero as long as those tariffs remain. And this is a good time just to show you, in terms of comparing economic catastrophe to the trade volumes with China, this is looking at a chart of the GFC time period, 2008, and how we had shipping volumes drop 20% during that crisis for about 6 months. And then we actually had a strong rebound back to 40% growth rates, only in a period of a year. So comparing that chart to maybe what's upcoming, in the next 12 months, we have those shipping ports say that maybe 50% of trading volumes have come to a halt. And a lot of people might say, look, the GFC was mainly a financial crisis to do with US housing and US investment banks. But my argument with that would be, what makes you believe there's not going to be a financial crisis in America if we see recession, job losses, trade collapsing between America and pretty much everyone else? We are going to see small business owners not being able to pay back their loans. And those small businesses might rent warehouse space. They might have brick and mortar stores that they're leasing. Whoever owns that building is not going to get their rent payments. And that's where we see the idea that maybe it's commercial real estate that is going to be the giant debt bomb that could blow up in 2025, not really the residential side of things. Throughout 2008, you saw the central bank cutting interest rates to zero and printing a few $1 trillion going into 2009. That was putting a financial band-aid on a financial wound. What's going to be the magic band-aid that fixes international trade? Building factories in a matter of months, that's impossible, and also fixing small business. That's going to take trillions of dollars of investment from the government itself. The central bank can't really help with that. They are restricted to dealing with banks only. So you're going to need a president that is willing to spend a huge amount of money, 5% of GDP, to fix this problem. And I just don't see that happening in the next 6 months. And therefore, the only fix that is left is that the Trump administration does all of these trade deals, including China, in the next 90 days. If we do see that average tariff rate drop to zero for the entire world, true free trade agreements, then yes, we could go back to a huge economic boom and we can all party. But unless that happens, we are on track for this recession or even depression outcome. If you like this video, I've got 2 more like it up here on the screen for you to watch next. I want to thank my YouTube members who help sponsor the channel.